Tokenization has the characteristics of the best technology that you could have. It doesn't ask for attention. It just works. It quietly changes everything. It is, think as if electricity, behind the walls. You don't see it, you don't think about it, but the moment it fails, then you have a big problem and the world stops.
Welcome to the Issuer Academy, Paymentology's podcast to innovate, scale, and provide impact. I'm your host, Merusha Naidu. If you're a fintech professional, banking leader, or an innovator in the digital payment space, you're in the right place. Here, we deep dive into the challenges and triumphs of launching next-generation card programs, from virtual cards and digital wallets to cross-border FX solutions. Let's get started. Welcome to the Issuer Academy. Today, we're diving into something that might sound a little technical, but trust me, it's the stuff that's making the fintech world spin right now. Cards, tokenization, and embedded finance. Cards aren't just about transacting anymore. They're becoming core to how platforms build better user experiences and improve engagement, and stay competitive. Tokenization is a key piece of that puzzle when it comes to security and scalability. Joining us are two leaders shaping the space from different angles. First up, we have Mike Galvin, co-founder and chief partnership officer at Toqio.
Hello, great to be here.
Nice to have you. And then we have Ignacio Gironella, our head of sales for Europe at Paymentology and global sales director at MeaWallet.
Hello, very happy to be here. Thank you for inviting us.
Thank you both so much for being on the Issuer Academy. It's a real pleasure to have you. Let's start off by defining the landscape. Why embedded finance is more than just a trend, and how cards have become the infrastructure powering it. So when we look at embedded finance and the advantages, Mike, for those who don't live and breathe fintech, what is embedded finance and why are cards such a critical piece of this puzzle?
I think most people will be familiar in some way, shape, or form with embedded finance in the consumer world. Everyone has, stored their cards at checkout, probably storing their cards in too many places. Hopefully that's all being tokenized now. And you're experiencing things like Klarna for buy now, pay later. And that's really gone mass market. You pretty much see it everywhere in some way, shape, or form. Where we've been focusing in now and where we're seeing some of the exciting card use cases is in B2B embedded finance, specifically where you see corporates with large merchant networks. It tends to be large amounts of flow of funds between them. You see things that both are on the supplier side, but also on the distribution side. And it's enabling a number of different financial services use cases. And I think today, a lot of the topics we talk about, maybe we'll dive into those card use cases within the embedded finance world of B2B.
Fantastic. And Nacho, from your view, what's the shift you're seeing in how companies are approaching card issuing?
Okay, so in card issuing, really the future and the change is digitization, no? How you, before cash was king, and now in many places, you can not even see cash is directly digitization, digital cards, virtual cards, tokenization. There are even countries, I don't know, like Norway, where really the only thing you can pay with cash is illegal stuff. So I would say that is the biggest shift, no, is moving to a totally digital world. And in that digital world, of course, tokenization plays a big role. That probably we will go into that afterwards. What is tokenization and all that?
Really keen to take a deeper dive into how both embedded finance is using tokenization to make all of these new processes a lot safer and giving that customer that invisible security, right?
I think maybe building on what Nacho was just saying, I think maybe starting very simple, right? Even in embedded finance, people still looked in a lot of the conversations we were having in the market, they see cards as business expense cards. And how does that play a role? And I think you rapidly start seeing some major use cases on the digitalization side. Probably one of the hottest ones in the market right now is going to be virtual cards in the travel industry, completely reshaping how they work, security, tokenization, all enabling in that. But, I think that's just at the forefront of the market here. But what we're definitely seeing is we're working with one large global NGO, and they have massive payouts. And initially, again, it looked at expense cards as being that, okay, we can put it on, we don't need cash anymore, we can have expense cards. And then also looking at, do you really need to have the expense card? If they have a card, you can do card-to-card payments, but you need to capture that card and you need to store that card. So I think the expanse of card-based use cases in B2B is really rapidly growing in some places where it's super mature, like in the travel industry.
Yeah, absolutely. And that's a huge sector. I think, Nacho, you had a good example of that as well.
Yes, well, we have a good example with Sonai, for example, that we do the tokenization for them. It's a big retailer out of Portugal, very big one, and we've embedded all the tokenization solution for them. And so you can actually just go on the grocery, so you do your supermarket buys, your groceries, and you just click once and everything happens on the back with a tokenized card, and it's a one-click buy. And of course, that's very convenient. It's frictionless. It's very secure. So it's very easy.
Yeah. And tapping into that B2B use case, I mean, OTA is huge. We're seeing a massive push across all of our regions where OTAs are saying, look, we need a simpler way to pay, that one too many merchants or many like hotels, airlines, partners, but we need to do it in a streamlined way where it's a single process. And I think the virtual card experience really helps to highlight that use case. So thanks for raising it, because we're seeing that everywhere. Michael, let's dig into, what are companies like Spotify and Amazon? How are they capturing the benefits of embedded finance? Because they've really been pushing embedded finance quite heavily.
Yeah. So obviously, I'll start with Amazon, right? So one of the big things they did, specifically on the B2B side, is they saw that they were almost in some cases the main partner of the merchants selling on there. So they were either, 80, 90, 100% of their revenue. So they thought, well, we need to pay all these people out. How can we pay out more effectively? Well, what if we had an Amazon-based account, right? So they started issuing Amazon business accounts or wallets initially, I think it was. But I think one of the challenges that we saw, and this kind of goes around the world in the embedded finance space, is if you just give them a wallet, the first thing they do is they take that out and they put it in their traditional bank account, right? Because they need to spend that money, they need to pay suppliers and everything. So what you started to do was see them wrap that around with payments, international payments, and cards, right? And now we saw them take it a step further, right? And that was with the introduction of lending, right? And Amazon in specific, now we're still not fully clear where Amazon went with this, because they had built up a massive loan book to their merchants. I think if it wasn't at $1 billion, it was near $1 billion, but they killed it. Where we saw other companies like Shopify and a US platform called Toast really embrace the embedded finance piece here, right? And again, what they're seeing is that by creating an ecosystem of financial services, it does several things for them. It obviously allows them to fully automate all their services. They're not worried about payouts. If they have to do a payout, that payout can fail. They need a team now to manage the failures. Here, they have full control over the ecosystem, and then it also allows them to monetize that ecosystem in a much better way, right? And that becomes hugely beneficial to them, especially when you look at Shopify and Toast. Both of them, 75% of their revenues come from financial services, right? And looking at that, it's usually broken down into kind of a few different categories. So obviously, most of them, they're doing the payment processing, so they're making a cut there. When they hold those funds on the accounts, they're making interest revenue, right? And usually in the hundreds of millions, if not into the billions, right? Bringing that back to the card piece, the biggest thing we found is that if you don't provide those kind of daily banking services around those accounts, that money's immediately out. So you're losing the interest revenue. You are losing out on interchange revenue. And actually, if you're providing lending services and those funds aren't held in the account, it's really difficult to recover those funds in an automated way, right? So effectively, as you look at all these things, even though the card in some sense, sometimes, especially when it's that expense card type piece, it's almost like an add-on. It's one of those glues that holds it all together.
Yeah, the mechanism that keeps it moving.
Exactly. So I think that's one of the big trends we've seen. I guess on almost a more traditional card usage, it's the things like the virtual cards now, where we're seeing on supplier payouts, on any type of payout, the card using Visa Direct or MasterCard Spend is becoming an amazing way to drive down costs and create automation within the business.
Automation as well as interoperability, and I think that's what's really key. The one thing that I think always comes back to my mind when it comes to embedded finance is they're leveraging the trust of these retailers and, usually if from a consumer side of things, you usually look to your bank and you have that trust and that relationship and you trust financial services from your bank or, your digital banking service. Now that's kind of flipped on its head because you're getting that same level of trust from the retail partners that you are your go-to and you work with them every single day. And so that kind of joint trust that's being created is just such an interesting part of this entire equation.
100% agree. Right? Effectively, these businesses, maybe they didn't set out to be banks, and in most cases they're not actually banks, but they have to bring what we call bank grade security, right? So if Shopify or Amazon were to have a major breach and funds were taken from these businesses or cards were hacked, that trust will be lost almost immediately. A bank may be able to recover from that in some way, shape, or form. So, the level of effort and consideration they need to take when implementing these services is huge. And if cards are going to play a key part of that, the tokenization piece again becomes hypercritical to them. Again, we can't overstate like the trust factor here, because even oftentimes, like you hit on it, right? The reason they've won the right to provide these services is because they've built up that trust. They are helping, specifically those three that we've been talking about: Amazon, Shopify, and Toast. Businesses are growing their entire business on the back of their platforms, right? And hence why they've won that right to provide the financial services. If they kill that trust because of lack of security, cards getting hacked or breached, anything, it's going to not only impact their financial services revenue, it's going to start eating into their core business.
Absolutely.
I was going to say on that point that I think the edge that they have, that banks lost it, is that banks were not driven by the customer. They were driven by their revenue, what they wanted, and business was being done how the banks wanted. And then suddenly people like Amazon or so started shifting the focus into the customer, being frictionless, being easy to interact, doing everything so that the customer felt that everything was at ease. And then they amassed millions of customers, and then the embedded finance comes and they started monetizing on all that, thanks to bringing embedded finance there, and offering things that usually was a bank. So they brought the bank into the customer once they had the loyalty of them and the logos. And many of us, we're more loyal to those logos than to our bank, really. So I would trust more an Amazon, and I don't know why, than to my bank.
Especially when it's in the B2B space, right? You are making all of your revenue off of these 3 or 4 businesses. You kind of need to trust them, right? If they're not doing good, you're not going to be doing good. So I think again we've seen that trust level be a big piece. Is also again underlying when you start to look at the banks, they're charging a lot of money for this, right? And again, the banks aren't going away. They're all, if they're not providing that service directly, they're going to be providing it through a platform that's banks that are sitting behind, Amazon, Shopify, Toast, and all the other providers sitting within here, right? But that ability for the corporates to almost look at deliver these financial services in a different way. It's not that they're looking at it as a single product, that each one of those product needs to make all this money, because it is enabling certain things within their business that make them make money in other places as well. And I think that's the biggest balance we've seen, is when they can offset some of these financial products to give them at a better price point, or even some cases free, because it's enabling a feature within their core business. I always look at Amazon, right? Like we use Amazon too much at home, but whenever we want to return, it's just automatic yes. It doesn't matter the reason. Sometimes it's been in the house in a box for 3 months. It's an automatic yes, right? Because they know that it's a loyal customer, right? You take that on the same side, on the business side, they are going to be making the money as a cut of your sales. They know that there's more competitive pieces coming up there. So do they really care about making maybe interchange, or do they care about some of the high fees that may come with the loan? No, they know that if they give you the good payment processing fees, good card rates, it's another reason. If I stop selling on Amazon, I'm going to have to go back to my bank. I'm going to have to pay higher rates. So there's a whole dynamic here where it starts to play out to be able to get financial services in a better way because of embedded finance, and the corporates are well positioned to do it.
Absolutely. And I think, that kind of is a good segue into, what we see is cards is what keeps people coming back, right? So when cards are embedded into platforms in the right way, they don't just support transactions, they actually help to change users' behaviors. So when we look at it, daily usage goes up, platform engagement increases, and suddenly financial services become a huge part of the user's everyday online experience. And I think that's where the magic really starts to happen, because this is kind of like when cards stop being just a tool and it becomes more of a habit for consumers, right? So, Mike, can you share how this is playing out in other areas? So, Amazon, obviously, amazing use case, and Toast. Any other areas more local that you can think of?
Yeah. So one of the big things we've seen as of recent is in the kind of payment services, right? So all the global acquirers, it's quite a competitive space right now, and they've been looking at driving value-added services around their existing offerings. Within that, we've spoken a bunch, and the actual engagement with their platforms tends to be quite low. And in one of the examples I was talking about, they were looking at their monthly active usage, and 1 or 2 times a month checking in on their transaction stuff, because they were able to see it hit their bank account 2 days later anyways, and that's where they were tracking. But as we started diving into that, right, when some of these challenges is, they were also using that platform to cross-sell their lending, right? So less time on the platforms, less opportunities to engage with a merchant on the lending opportunity. And as we started to shape out the solution with them, obviously you started to see multiple ways where embedded finance started to drive benefits. So one was on the payouts, you're paying it out because like Amazon was doing it into an account that you own, so completely frictionless and automated and under your control. Second, you are keeping them on that platform because you're enabling them to use that money effectively, specifically with cards. So small businesses, cards are the lifeblood of a business. They're running their expenses on it. They're paying their SaaS fees on it. And even for them, even on a small business, the use of virtual cards to be able to, put all their SaaS subscriptions on it, put their, one-time payments on it. If they're making a big overseas payment, they don't want to risk anything getting stolen or a card number getting stolen. So what we saw is that, and again, both in practical usage, but also within research, is the card was the driver for daily active usage. And we almost all forget about it now because we go out, and even if it's as simple as buying a coffee for a prospect, or if you're taking a tube to go to an event to pay for something or to promote something, every time you tap it, right, the little pop-up comes, you spent XXX.
Yeah.
And you got to categorize that, because at the end of the day, it's going to have to go back to accounting. You probably have an accounting integration for that. We know in the UK, at least, that making tax digital is coming in. So this stuff of like, you have to do it. You have to engage with that, or else it all backs up. So what we saw is that actually, what went from 1 to 2 times a month was in reality going to achieve 2 to 3 times a day in some level of interaction. And every time that interaction happened, they had an opportunity to upsell, cross-sell.
Yeah.
And even on the fact of, if you get a pop-up from an app that you haven't seen in 6 weeks, you're like, why am I getting this? Get that out of here.
Yeah, I know.
But if I'm getting, if I'm used to engaging with my applications and I get one, I'm going to see it. And if, obviously, if you get that, all of a sudden get that one, which is, hey, we noticed you got payroll in 2 weeks and you're a little bit short on cash. Do you want to draw down on your available fund?
Yeah.
These are the ways where it all can start to come together to change.
One thing to dive into that is it's a customized experience for the SME, right? And I think that's how embedded finance is really changing the game, because you're creating something that SMEs are the largest underserved segment globally,
100%.
right? And at the same time, you're really looking at, okay, how do I help you grow your business by really making all of these things seamless, but focusing on what you as the SME needs to care about. And that is so powerful.
Yeah. And I think what's really interesting, so 2 things on that. So one, jumping back to an earlier part of the conversation, is if I help that SME grow, and it's usually when I help that 10,000, 20,000 SMEs grow, they're going to buy more of my products. So I've got there's a win-win here, right? So it's a positive ecosystem play. Yeah. But second, and this is the thing that we've been coming up against a lot recently, is the use cases and the way things operate are so specific per industry. A bank can never replicate that.
Yeah.
A bank is a bank, like any of the good big banks, even if they're doing amazing. Revolut's a great company, they're doing great, but it's still just one Revolut, right? And you start to look at, even if you go look at FMCG and then break that into the different areas of FMCG, they've got complex processes, the way they engage with their suppliers. One of the interesting use cases that we came up against in one industry recently was actually on food and beverage delivery. And it was actually one of the biggest things that solved the case was tap to pay, because they were getting They weren't getting paid at the time, or when they were getting paid sometimes by check. A huge manual process to run behind that, but their days sales outstanding were much higher than they wanted. And the ability to show up with tap to pay, in a perfect world, they were doing tap to pay with a card that they had issued to the merchant as well. And it helped automate that whole process, right? But they were able to build things that made sense for that specific industry and even that subset of that industry. And we think that's really unique. You're able to solve problems that, 30, 40,000 of your customers or your distributors have that would never make sense for a bank to try to solve that problem. It's impossible, but you can. And you've got the data and the background and the incentives to do that.
Yeah, it's hyper-personalization, but at scale.
Exactly.
Yeah.
And I would say also bringing invisibility on the back, starting people once a card is embedded and you starting to use it like in a platform, it stops being a payment method and starts to becoming the product experience itself, no? So it's completely invisible and frictionless, and then suddenly you're embedding a banking service into a corporate and nothing, and really people start using it and cannot see it, no? Which is
100%
I think like the middle point between the embedded finance with the card and the tokenization, because really also that's the beauty of tokenization on the back, no?
It's funny, we always just, and it's gonna be hard on a podcast to use my hands and describe here, but you see these, people have invested millions, if not billions, into ERP platforms, and you see these lovely processes of, trying to optimize invoice payments and supplier pay and all this back and forth, and then everything jumps out into the old world ecosystem of, either putting your card into an online portal or to going to your bank and making a payment. As soon as you bring that all into a single flow and ecosystem, whether that's leveraging cards and tokenization or account-to-account payments, those flows become super frictionless. It becomes the easiest way to pay. It's also where you can introduce the lending opportunities. So going back to that tap to pay on the delivery, it did two things. One, actually did three things. My favorite, the last one. So one was just that ease of payment and collection. Two, they also gave the option, if you don't have the money today, you can do that in 30, 60, or 90, but that was on financing. So the late payment they made money on. But the biggest impact they found was the reduction in parking tickets. Because the checkout times were going so much quicker.
Yeah.
Something like their parking tickets on delivery went down by like 70%.
Wow. And again, an added benefit that, they probably didn't even take into consideration.
Exactly.
So let's keep on this trend of, let's keep the money moving, but inside the platform, because I think that is absolutely key. So here's where strategy meets operations, right? Keeping funds in the ecosystem can really mean the difference between growth and churn. One of the biggest success factors for embedded finance platforms is keeping value circulating inside the ecosystem. When users leave their money in the platform, there's more of an opportunity for automation, lending, as you just said, insights, as well as loyalty, because that's also another driving factor in one of the benefits of embedded finance. But it is a delicate balance, right? When we look at the business models, Mike, can you explain on this a little bit more and talk about the business impacts of not having cards versus having cards?
Yeah. So again, I think if we think maybe slightly looking at the consumer world and the business world, right? So obviously the big example in the consumer world is the Starbucks wallet.
Yes.
Right. And once you have the money on there, you know what you're doing. You're only going to go spend it on Starbucks, right? So you don't need to be able to take that off. You're not allowed to take it off, and you don't need a card to go spend it someplace else, right? You don't need an open loop system like that, where when you bring things into the B2B world, actually that ability to spend it and keep it open loop is quite key. And we see big trends operating in that space. So one of the biggest ones probably right now is the fuel cards, right? So this whole, I think it's Visa's got their fuel card 2.0 or fleet 2.0. All of that is looking at making what was once closed loop now open loop. Mm-hmm. And that's because, if you put money in there purely for the purposes of fuel, you're going to keep it as tight as possible, right? But if it's now in there for travel, right, and that ability to book your hotels, all your tolls, all your fuel, all of that, it starts to become much more effective, right? And I think, again, when we start to look at this, cards start opening up this, again, I keep coming back to daily active usage, but that and automation. I'd say just building on that one step further, it's also control, right?
Yes.
So that
Key.
one thing is, you have your money and you're going to spend it and you can spend it anywhere, that's fine. But if I take that fuel card example that we want open loop, but not too open, the ability to drill down on MCC controls so that, yes, you can spend that at a restaurant, you can spend that on, these 10 MCCs, but you can't spend it on gambling and the likes of that. It's perfect. So again, cards, I think they're changing and taking very different dynamics. That ability really to use them on one-to-one interactions or to controlled interactions, it's one of the biggest flexible tool sets that can be embedded in a platform to both have control but global reach.
It's really about one solution that is solving multiple pain points in different segments, but in such different ways. Because I think the fleet example is an excellent one. Not only are we seeing MCCs used to restrict usage, but it's also like geolocation.
Yep.
Where is the truck right now? It can only spend within a 5K radius. All of these things are making the card such an important part of the operational aspects of, how these businesses operate.
Yep.
It's really fascinating.
Yeah, on the geolocation, I mentioned earlier an NGO we work with, they have big events. And, one of the problems they used to have, it was a cash-based distribution. And, that was really, once you give that zero control. And it's something they're not jumping at very quickly. They want to, ease things in. But, MCC codes are an obvious one. But the bigger one for them was the geo restrictions, because what you don't want is people coming, registering, arriving, and off they go on holiday. Instead, you're giving that money for the benefit of the event. Control that, right?
Absolutely.
And I think, again, it's another one of many examples of where the card and the card controls can just drive better usage of money and the recoverability of that money.
Absolutely. I think one of, when we look at the card is one aspect, but then whenever we talk about payments, and we're in the industry where we can't talk about payments without talking about security, right? That is another area of balance that we always have to try and find. So tokenization, and Nacho, I'm really going to hone in on you here. What does it actually do? What is tokenization? Let's pull back the curtain on what I think one of the most important topics, but also one of the least understood parts of the space, right? So Nacho, what is tokenization? How does it tie into everything we've already discussed so far?
Yeah.
And how has tokenization actually changed how people interact with payments, especially in e-commerce or mobile-first regions?
So for me, tokenization has the characteristics of the best technology that you could have. No, it doesn't ask for attention. It just works. It quietly changes everything. It is, I think, as if electricity, behind the walls. You don't see it, you don't think about it, but the moment it fails, then you have a big problem and the world stops. No, I mean, if you're going to buy something and suddenly your phone doesn't work when you tap and you're in the tube to enter, you're having problems. So for me, it's like a quiet revolution, that came, saw, conquered, and without the cardholder even knowing its name, because probably you ask somebody on the street what is tokenization in payments, and he's probably going to talk about Bitcoin or something, because that has nothing to do, no? So that's for me, like the technology of tokenization. What is actually happening? So your card number of your card really is what your DNA is to you, really, no? So it uniquely identifies you with your card. But luckily, we don't expose our DNA whenever you go for a run or eating a meal or something. So this is the same thing for the card number. Is getting exposed actually every time. So the idea of tokenization is to change that number of your card, your sensitive data, for a token that really, it represents your card. But if it's somebody just hacks the system and gets that token, it cannot relate it to your card. So it's completely secure. It's frictionless, is easy to use, and really very convenient. So that is what tokenization is. I don't know if it was clear.
Maybe for our audience,
Yeah.
Let's imagine I just bought a cup of coffee, right? I've tapped my phone.
Yeah.
What's actually happening behind the scenes? Like,
Yeah.
what makes that a safer transaction than if I swipe my card?
Yeah. So really, when you're paying, you're not paying with your card. You're actually paying with like a surrogate of your card, the digital representation of your card, which is combining a token and a cryptogram. The merchant system sees the token. They're actually not seeing your card. So really, it's very safe because the merchant doesn't know your card. Everything, the token is stored in a vault in the scheme in Visa, MasterCard. And so nobody on the back is actually seeing your card numbers and your details. So it's extremely secure. Yeah, that's what's happening. So really, you're paying with something that is representing your card detail.
I think it's one of the reasons why tokenization is going to play such a big role in embedded finance, right? So when you look at a company who's not a bank, a big brand that you're familiar with, they don't want to be regulated. They don't want to know about compliance. They don't want to know about GDPR, PSD2, PCI, but they have to, right? They have to be secure. And what they're thinking about is, how do I deliver a product like this without all the risks and securities, or having to, get called in by the FCA or something like that? And as you kind of peel that back, especially moving into the card space, PCI space, the biggest threat they probably have is exposure of card data. And, PCI puts in protections, but it doesn't protect. Tokenization puts in protection and it protects. And I think that's going to be a fundamental game changer, that people can do things at scale without being banks, without being financial institutions, without being PCI regulated themselves, because the ecosystem and the underlying providers like Paymentology are going to enable tokenization and really allow some of these card use cases to come really to their full fulfillment.
Yeah, absolutely. And I think, what is so key, and I think this is what we probably want all of our listeners to take away, is tokenization means that the merchant doesn't have my card details. It's really as simple as that. And I think that's one of the reasons why we saw merchants, so card on file merchants, being one of the earliest adopters of tokenization. You had MDES for merchants, Visa tokenization service for merchants, and it really is creating a safer ecosystem all the way down the chain. And so absolutely not. And I love the way that you've described it.
And if you think now how you buy in Amazon, it's crazy, because you want a book, you click, and the book next day is at the front of your door. And that is, it's so invisible. Really, that is happening because there is tokenization on the back. And that is what tokenization brings: invisibility, frictionless, because it's one click. And for Amazon, it's great because people are just clicking, and buying. The merchant on the back that is actually offering the book, it's great for them because they can buy very easy, and everything is very secure, because actually Amazon is not storing your card details. It's a token. If a hacker comes in and gets that token, it can only be used really with Amazon in that operation. In that buying operation. So it's completely secure. So it's very convenient.
Yeah, absolutely. Yeah. And while you're on that point,
yeah.
Nacho, are there any myths that you've heard about tokenization that you'd like to share? Or myth bust?
Okay. Yeah. What I hear is that really tokenization, it's only for, the first thing that people think it's Apple Pay or Google Pay, but now really tokenization is going everywhere. You can tokenize many things. So really, so you can tokenize buildings, you can tokenize art, wines. And it can go to wearables devices, because now you can pay with a ring. I've seen payments with a nail, that you put something in your nail that represents your card, and you can tap with your nail. So really, tokenization is going everywhere. Yeah, and probably we can or I can deal now. So what I see in the future for tokenization is that really you can tokenize your account of your bank, and then there is no need for even cards. Perhaps you could just tap and you would pay from your account to the account of the restaurant, no?
So Nacho, we talked about keeping users on the platform, but what happens when your card competes inside a digital wallet?
Okay, so when a card is inside a digital wallet, yeah, really you're paying with the representation of your card, and you tap, and that is how you do it. If not, you have the other way, which is what I was talking before, is about being account to account. So you're moving funds from your account to the account of the merchant. And the future of that is being able to actually tokenize your account. So you're playing with the digital representation of your account when you tap with your phone, and directly the money goes from your account to the account of the merchant. So that's
a great example.
Yeah.
I think when you look at how digital wallets and cards, how they come together with tokenization as well, that's also where push provisioning comes in, right? Because there, it's not just a technical upgrade. It's a way to ensure that card is still top of mind, but it's empowering the wallet, right?
Yeah, well, really, with the push provisioning, what you're looking is how do you upload, let's say, your card into Apple Pay or Google Pay. So the idea there is that you can do it manually. So all of us probably, we've done it with our fingers, 1, 2, 3, 4, 5, expiry, CVV, or you take the photo. That is how you manually embedding your card into Apple Pay and Google Pay. But what Apple and Google really looked into is that people, for example, my father, like 60% of the people that would upload their card, they would stop doing it because they would think that somehow they were inputting the numbers and they would get a breach and they would lose that sensitive data and somebody would use the card. My father, for example, he would start doing it manually or take the photo and at the end, he wouldn't upload the card. So Apple and Google said, hey, I'm going to invent something that is automatic. So how we solve this today in Paymentology is that we have an SDK that is embedded into the app of the entity, and automatically you push, and with one click, you initiate the tokenization on the back, you create a token that represents the card, and you set that token to Apple Pay and Google Pay. And that is how you upload your card there.
Absolutely. And then I can tap and pay anyway.
Yes.
Which is, the convenience is the problem.
Correct. Yeah.
And Mike, over to you. So, where is tokenization, really impacting embedded finance? So, when we look at it, where is tokenization helping embedded finance to make the biggest waves?
Well, maybe just first starting on the push provisioning, I know it's technically tokenization, but obviously we've taken advantage of some of the Paymentology technology for push provisioning. And it's, to be fair, it's key, especially when you're looking at, distribution en masse. That ability, especially with the use of things like virtual cards, push a virtual card, enable it to add it to a wallet to be able to immediately spend. And we're seeing some very interesting use cases in this space, right? So especially where you don't necessarily want to fully have to onboard a customer, you just want cash distribution out. So we're seeing that I kind of hit on it on the NGOs and their distribution out, and you see that both in their operational needs, but also in their relief needs to be able to kind of distribute funds in a disaster. Seeing it on marketplaces and platforms, especially, I think Visa hits on it good in a lot of their conversations recently about shifting from millions of sellers to billions of sellers. And then obviously with those billions of sellers, lots of times you need to incentivize them and pay them out the ability to, again, push out virtual cards to be able to either do refunds or to be able to support incentives and to have that immediate usage within the platform is great. We've seen it, again, going back to the food and beverage sector. How do you incentivize a bartender or a staff to push your drink? Give them an incentive program, which, if you've got all the data, who's selling what, and you can push money immediately onto a card that they can spend that day. So again, they know that a good night of selling a product means that they've got a free dinner that night, which they pushed onto their card. So I think it's that, again, coming back to what we talked about earlier, it's automated, it's secure, it's scalable. Tokenization kind of, or these use cases take advantage of that and enable these businesses to do something that would have been highly, highly complex, would have involved either, one of the ones we're dealing with right now, it's literally they're trying to figure out how they replace checks in the US. Now it's literally an automated process, not even same day, same second, right?
Same second. And would you say that, it used to be a nice to have, now we're kind of seeing it as an essential need to, make sure that carded platforms are still relevant. Do you agree with that?
100%. Right. So again, if hitting on the conversation earlier, these companies are not banks, are not financial institutions. They've built a loyalty and trust with their merchants. If they break that in a serious way, right, with like money being lost, that trust is gone immediately. Right. Tokenization solves that on a huge scale, and probably in what traditionally would have been one of the easiest ways to lose money is someone get your card data. And as we have all these different things coming around what is the push fraud and all of these things, they need to lock things down. It's going to cause concerns. Any place where they can implement these new financial services, but do it in a highly secure way, I don't think they start some of these things if there's not that guarantee of security.
Yeah, absolutely. And Ignacio, you're in a very interesting situation. So right now at Paymentology, you cover both processing as well as tokenization, right?
Yep.
When you look at new issuers, is tokenization essential for their survival, or is it still just a nice to have?
Yeah. So my recommendation and what I see is that you should not treat tokenization as a feature, but you should treat it as a foundation. It should be the foundation of everything that you do, because all the customers and the new customers that you're going to have, they are all digital native and they all want it now, and not even now, but now. So everything needs to be founded on virtual cards, on tokenization, to be able to instantly issue a virtual card. And so it's not only about security, no? So it's about how you tokenization turns a good product, I think, into a great one. And that should be how you start. So you should not treat it just like it's a new feature that I'm going to have Apple Pay, but yeah, foundation, I think it's the summary.
Perfect. So let's look now to the road ahead. As we look forward, the intersection of cards, tokenization, and embedded finance is becoming the foundation of future financial ecosystems. Mike, where is the card going? Any features or user experiences you're excited about? Any demands on your customers? Or are your customers making any demands that you or Toqio weren't even looking at 12 months ago?
I think coming back to some of the themes that Ignacio hit on today, right? This kind of invisible and seamless and secure. What we're basically seeing is that when we look at, especially, movement of funds and payment distribution, going out to merchant networks who can be global, right? Lots of times, especially as we've looked at a few use cases in emerging economies, the complexities of this kind of global distribution of money, even if you have account to account, if you have a global mechanism in place, the scalability isn't there, right? And the need for localization of payment methods and everything is still not there. So that payout piece, that distribution of funds via cards, card to card, is probably the biggest place where we didn't expect to see. And I hit it on earlier on the NGOs, on the marketplaces, on the creative economies, and there's billions of sellers. You need to give money to a lot of different people, and we saw this with one of the largest social media companies, one of the largest NGOs. They lacked this ability to get funds into the hands. And we saw everything from trying to use gift cards to random solutions that just were not working. And we think that kind of tokenization doing this via cards is one of the biggest ways that's going to change how people are paid out globally.
Absolutely.
Yeah, just to add on that, a new segment that is also moving into that is insurance, no? All the reimbursement, it's called in English, yeah?
Yes.
So now it's quite legacy. I think that we seen like the insurance world, like we were seeing the fintech world, like several years ago, no, like 10 years ago, because now it opens a big opportunity to be able to, thanks to tokenization, virtual cards, instant issuing, to be able to send the money to so the insurance to the insuree, some money through that, and then keeping that person inside of your environment in the app, and then getting all those data points to be able to cross-sell different things that you can do. So I think it's very interesting. Yeah.
No, and actually I saw a great use case set on the other day on the insurance payout, where they were able to negotiate deals with, in a house where everything gets stolen, instant issue a card, control the MCCs again, have it spent at providers which they've had deals in place with, all of that, again, seamless, where, again, previously it was a check and maybe they went on holidays.
The other day I had one with weather insurance. So you're in Singapore and you have an insurance that if it rains, they're going to give you $100. So it rains,
That's
you
a lot
ask
of
for
pay.
it. Well, yeah. Well, you get the $100 in your app, and in the same app of the insurance, you can tap anywhere, and then you're starting to pay, and then suddenly you're going to pay for some headphones, and then the insurance identifies that and say, hey, do you want an insurance for those headphones? So then you start playing a lot with that, no?
Yeah.
So it's very interesting.
It really
Where
is.
we're going.
So let's end on a practical note.
Okay.
For someone building a B2B embedded finance product, what is the one thing they absolutely need to get right with cards or risk falling behind. So, Mike, start with you. What do you think?
I think it's very, very basic, right? So at the end of the day, it comes back to our conversation. We referenced several times throughout the conversation, it drives usage of the platform, right? And therefore, if you have a card proposition that gets the top of wallet, so that means it's got all the bells and whistles that you expect of card controls. It's got potentially, the things around it, like insurance. We've got one client who's building a unique cashback solution around it. Getting a card proposition that can be the top of wallet proposition is number one, right? And that means it needs to be on Google and Apple Pay. It needs to have all those things that you expect. And we think that if you can deliver a card that can be top of wallet, you can win.
Absolutely. I love that. And Nacho, same question to you.
Yeah, well, perhaps I would say having the right partner. Like, it's very important, I think, who you partner with and how that partner can bring scalability or easiness of implementing. So I would say always try to find a good partner to travel with. So they say no. So if you want to go fast, go alone. But if you want to go far, go with someone you trust.
Yeah, absolutely. And I think to all of our payment partners, partnerships is key to our success, right? So absolutely fantastic point. So I'd like to thank both of you so much for joining us today. This was extremely insightful. It really brought home how issuing cards and tokenization are shaping not just payments, but the full embedded finance journey and how customers, both, consumer and corporate, are actually being included. We're now taking them into account when we are building out these new solutions. And it really is all about balance. A really great SME solution coupled with security, giving SMEs, corporates the peace of mind to say, this is how I want to continue to do business. So thank you so much for joining the Issue Academy, Mike.
Definitely great to be here, and thanks for the invite.
Thanks for inviting.
You're welcome. Thanks so much. That wraps up today's episode of the Issue Academy, Paymentology's podcast to innovate, scale, and provide impact. I hope you're leaving with fresh insights and actionable strategies to help you revolutionize your card programs and drive true impact in the world. If you've enjoyed today's conversation, please leave a review to help us reach more pioneers like you. Also, be sure to subscribe and follow us for more inspiring episodes and behind-the-scenes content from Paymentology. Until next time, I'm Merusha Naidu. Keep innovating, keep scaling, and keep striving to make an impact.